Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. Well, it was a good week for the buy recommendations, and there's some interesting things going on. So let's get into it. The S&P 500, we're coming right into the bearish rainbow convergence here. So this is where uh, if to maintain the bearish stance, the market needs to turn down here soon. So this is the cluster of moving averages when prices broke through all those and went down to the bottom. All these moving averages came together, and at the time I said we're either going to have prices are going to sit here for a while until the moving averages move down, which is a type 1 convergence, or a type 2 convergence is where prices come back to that convergence. So the way that a type 2 convergence works is if prices don't break through this cluster of moving averages, then it promises, quote, promises a new low. So uh, this is the perfect place to be short the second go around. And I was adding to I put up an update on this a couple of days ago and said this is the time to add to your shorts, which I've done, and probably up to, I don't know, 12 or 13% of the portfolio short uh, the S&P 500. And I noticed this is wrong. My stop is 5,800 at 5,700. So anyway, we're going to get some clarification in the next week or two of the direction of the market. I'm showing platinum here as a second item, be a second buy recommendation because there's been some really nice developments here. It doesn't look like it on this long-term chart, but just to give you a little background, there was about a 10-year decline in platinum, which, probably lost 50% of its value, if not more. And then it's consolidated into this tightly wound up consolidation where the bulls and the bears are fighting it out. And it will be resolved similar to oil, actually. And it'll be resolved here. When it is resolved, either up or down, it will move in a fast and furious way. And so, being bullish on it, of course, I hope it's upward. And you can see last month we got a bullish hammer, which was positive. And now this week, so far this month, we seem to be getting some follow through. Uh, but anyway, this is going to come to a conclusion pretty soon. And, these little items that I've notated here are not to get too technical, is the Wyckoff method. Wyckoff was back in the 40s, 50s. I think he died maybe early 70s, I think. But basically, he was a supply and demand analyst, and so here was our support level, and according to Wyckoff, you'd get a spring where the smart money would break this support line and get run into everybody's stops, who would get stopped out at lower levels, and then they'd come in and buy, push it back up here, and then you'd get a secondary reaction and a last point of supply before prices go higher. So we'll see what happens on that front. I want to take a look at just this shorter term development because it's suggesting higher prices here and by a lot. So what we have is a 2 month bullish inverse head and shoulders pattern with the left shoulder, the head, the right shoulder with the neckline. And if you measure from the bottom of the head to the neckline and project that distance upward, you come up with $119 or 30% potential upside. So if that were to happen, 119 would push us way up here and get this whole bigger pattern in That would be like 47 points. So that would give us the price projection of this pattern would be 142, which would be way up here. But the small pattern would break us out of this consolidation. So it's kind of an interesting development. And I moved my stop up to 87. I think it was at 89. So that's platinum. Exelon, this was one of the buy recommendations with a textbook, descending triangle where we bought it on the breakout. It went down lower, retested that breakout, and then kind of went vertical. And as those of you that have listened to me for a while, on every up, these are weekly bars, but on every up day on any pattern, if it's up, I sell a minuscule amount. If it's up 10% in one day, I might sell a few more shares, but I'm always selling on up days and I'm always buying something back on down days. Now, our price projection based on this pattern is 51 and it got to 48 a few weeks ago. And as I said at that time, you know, this could be basically reaching its price projection, but it hasn't quite. So what I do in this scenario, when it approaches my price projection, I'm selling more and buying less. So I did buy a little bit on Friday, and so Exelon, still bullish on Exelon. Less bullish though, because the reward to risk is not as favorable way up here as it was down here. So I probably have half of what I used to have in Exelon. China looks fine. We went bullish way back here in early 2024. Sentiment was so bearish on China, and went neutral up here, went bullish again, and have been bullish this whole ways. Um, and so nothing has changed. This is the wrong stop. I'm sorry. The stop is at 29. It is not at 34. So please disregard that, but still bullish on China. Antero Resources, bullish. It's had a great week. Here we have our symmetrical triangle, and we got our breakout, and we got a retest, and it's been all over the place along with natural gas prices. Natural gas stocks are it's hard to trade as silver and silver mining stocks and some of the cryptocurrencies. So, but it had a great week, up 8%. And let me just show you the price projection based on this pattern is 63, and we're at, let's call it 39. So the upside is really substantial. And let's take a short-term look for those of you that are trying to manage a position in this or are looking to get into that. So let's take a closer look at this. And here we are. And we got the infamous bullish rainbow convergence coming into play here. One more update would bring these moving averages together and would create either a type 1 convergence where we got a pause until the moving averages moved up, or we get a type 2, which is where we get a retracement back to that convergence. So that would be around the 36 level, and we're around 39. So that's a big, that's what, 8 or 9%, something like that. So, my strategy, of course, on up days, I'm selling, I'm selling. I see this coming together. I sold a little more than normal on Friday. On Monday, if we're lucky enough to have another up day, I'd sell even a little bit more of that. And then when we get a pullback here, uh, I would buy much more. I haven't gotten to my maximum position on Taro Resources because of all the volatility. And if it comes back to this convergence and holds, I would be buying quite a bit of that on that weakness. But Antero looks great. A lot of upside. Silver, this is just the big pattern, the big picture stuff going back to 2000 and the bottom in 2008. And we're in a symmetrical triangle, and we broke out of that in early 2024. And we've been kind of struggling to get higher here in a meaningful way. But the direction's definitely up and the potential is enormous. $64 price projection, and we're at 30 basically. So my buy stop is at 29. Let's take a closer look at this. And here we are. So we just need to hold this confluence of moving averages to get things going higher here. My stop again is at 29. So I don't want to see this break 29. I'd really like to see this to start moving with the potential upside potential it has. Silver mining stocks look great too. I'm not recommending them because having one metal and then having also mining stocks in the same space would be too risky for my recommendations. Bullish on silver and silver mining stocks. The 7 to 10-year Treasury ETF, IEF. This is a nice, boring uh, holding. It pays a monthly coupon. And our inverse head and shoulders here, left shoulder, head, right shoulder, bullish inverse head and shoulders pattern suggesting 103. So, it's had a move, it's done well, but it's not owning NVIDIA or something, but this could turn into be, a nice, very nice appreciation from 94 to 103. That's, a nice move and a nice dividend. And last but not least, T-bill. This is not a recommendation. This is a money market alternative. It pays a 4.10 yield, and you get what, a twelfth of that each month. And if you have your money in a bank money market, you're getting 1.5% or something ridiculous like that. This is a good alternative. I probably have 35% of my portfolio in this. We get into a tough market and I can get a 4 or 5% return for the year, and other people are down 25%. I'll be happy. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends and neighbors and family, and have a great weekend. I will most likely be putting out a recommendation tomorrow. Adios.